Hey guys, how's it going? It's Andy from Macao Investing. Happy Wednesday. In today's video, I wanted to talk about the part of the travel industry and tourism industry that I've kind of brushed over in the past couple videos. I've made videos talking about cruise stocks in the past and why I think that they could be a decent opportunity in the future, and some of the problems associated with them still having people on them and not being able to dock anywhere. And I've also talked in the past couple videos about airline stocks and some of the problems associated with them, the government bailout from the stimulus bill, and Warren Buffett kind of selling $13 million of Delta shares. But in this video, I had a requested topic for another area of the tourism industry that I haven't really talked about so far. And I did some research for this video last night, and kind of more motivation than research, and I watched Ocean's 11. So in today's video, we're going to be talking about casino stocks and some of the potential that I see with them, the problems that they've had in the past, and my expectations about taking a short or long-term position in these stocks. Before we get started, I gotta say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. Everything you hear in this video is just my opinions, and you should do your own research before making any decisions about your financial investments. Alright, so this is the second time that I've tried making this video. I just recorded the full video, or at least I thought I did. I went back and looked at it, and for some reason it only recorded 5 minutes and then randomly shut off. So hopefully this is going to be a better take than what I did last time, but fingers crossed. Also, this was a requested video, so if there's a topic you'd like me to go over in a future episode, I'll have a comment pinned in the comment section down below, and if you want to reply to that, I'll get to it as soon as I can. So in this video, I wanted to talk about 4 of the largest casino stocks. They could be the largest or ones that I find the most interesting. So in this video, we're going to be talking about MGM, which is ticker symbol MGM, Wynn Resorts, which is ticker symbol WYNN, Las Vegas Sands, which is LVS, and then finally PENN National, which is ticker symbol PENN. As you can imagine, these casino stocks have been hit really hard in the past couple months. I feel like pretty much everyone has seen the video of the empty Las Vegas Strip, and for me that's just crazy to think about considering I was there just a year ago. Also, while I was there, I did not gamble or lose any money because I prefer to lose my money on the stock market like a real adult. So as you can imagine, these companies have been hit really hard because the fact that they make most of their money from gambling and casinos, and the fact that the Vegas Strip has been on lockdown for I think over a month at this point, you can make sense why a lot of these companies are down between 30 and 50%. So comparing to the rest of the travel industry, they've been hit pretty much the same, but at this point the overall market's down only 20%. So based off of that, I wanted to discuss these 4 companies and talk about kind of the pros and cons I see about investing in these companies. Obviously you're getting a huge discount, but you have to kind of look back at what problems they've had in the past and look forward to kind of determine if you think that this is a good investment to have. So when I go do research for these videos, some of the first things that I do is I just Google these overall stocks and look at the long-term share price and how it's moved. Things I'm looking for are kind of weird movements in the company that does not really align with some of the major world events. When I look at these long-term charts, I kind of expect to see a drop between these major world events, whether it be the dot-com bubble bursting, the financial crisis of 2007, 2009, and that's just kind of expected. So when I look at these casino stocks and I see major drops in their share price between 2015 and 2016, and then when I look to just this year, you can see that the companies have been losing value in their shares at the beginning of this year, prior to the kind of spread of the coronavirus. So seeing these drops, I needed to kind of go back and kind of have a good understanding of what happened during those times. And during this research, I was fascinated to learn about the gambling economy of Macao. In my naive American brain, I just kind of always have assumed that Vegas has been the gambling capital of the world. Just because, I see all these movies, it's Sin City. Obviously, I'm very biased being in America, but anytime I think of people really gambling, I think of it being happening in Vegas. Doing research for this video, I was shocked to see that Macao has 3 times the amount of gaming revenue compared to Las Vegas, and that was very eye-opening to me. So when I did research for this video and was trying to explain why these companies dropped so much between 2015 and 2016, I kind of narrowed in on Macao. So during 2015 and 2016, Macao saw a steep drop in the overall gaming revenue that they had. And from what I saw, it was between 50% between 2015 and 2016. And those drops have kind of been continuing to happen. And so that explains the massive drops that we saw in 2015 and 2016, and then also some of the drops at the beginning of this year. So looking at the overall portfolios of these 4 companies that I mentioned, I saw international presences for Wynn, MGM, and Las Vegas Sands, but I did not see that with PENN National. So when I looked at the revenue for these companies, it makes sense why I saw these incredible dips in revenue between 2015 and 2016. And then you look at PENN National and it makes sense why it's relatively stable during that time. So now let's go to present day. The past couple days, these casino stocks have been popping a lot compared to the overall market. When I started doing research for this video last night, I saw that on Tuesday, these casino stocks were up as high as 30% during the day, and then kind of fell with the overall market. The market finished pretty much even, but casino stocks still finished in single digits, but nowhere near the 30% gains that they saw earlier in the day. And some of the major news events that are pushing it up had to do with the fact that things are looking slightly more optimistic about coronavirus. You saw the removal of the lockdown in Wuhan, you saw the slowing of cases in Europe, and then the opening of casinos in Macao kind of pushed them a lot higher because, as I mentioned, they have a huge presence when it comes to these Asian markets, especially in Macao. But after seeing all these articles kind of praising the three companies that I mentioned that have ties to Macao as being kind of a safer bet because of this exposure, and Macao casinos are opening up. But then I think it's super interesting to compare that to these problems that we saw in 2015 and 2016 are now kind of being pushed in a positive light compared to what we've seen in the past. And I think these kind of boosts in the overall stock price is all speculative. From what I've seen, while the Macao casinos are open, it seems like they're having a lot of problems getting people into the door and spending money. I've seen articles about all of these crazy incentives that the casinos have had to get people into the door. And then you have the restrictions for how many people can be in there at any given time or at any given table. So while I think that the increase in revenue or just having a small trickle of revenue is positive for these companies, I think the 30% moves that we've seen have been kind of unwarranted based off of the actual stuff that we're seeing on the ground. So looking at these four companies, they've all come out and said that they're going to be having a really tough time based off of these lockdowns. So on this channel, I've been pretty vocal about some of the factors that lead me to wanting to take a position in a company during this crazy economic times. One of the main things I look for is positive returns during the longest bull market in history. Because when things are going well, I expect my money to be growing and the value of the companies that I invest in to go up. And so when I look at these casino stocks, they don't make me feel as confident as stuff if I looked at, Microsoft or Coca-Cola or Nike. Stuff that has proved to me that they have been relatively stable and a great place to put your money. And while things look pretty good at the beginning of the 2010s, these incredible drops that we saw in 2015 and 2016 makes me very wary. Also, I look for very solid fundamentals because, as you can imagine, these huge properties that they have in Vegas and across the world are not cheap. And the fact that people are not being able to spend money there, they're still paying the mortgages and all of the fees associated with these huge properties. And so when I look at free cash available, that's kind of the big factor that determines how long I think these companies can survive without the assistance of a loan or maybe even federal intervention. When I looked at these companies for the cash that they have available, Las Vegas Sands was in the lead with around $4.2 billion. And then WYNN and MGM had around $2 billion. And then PENN National, being the smaller of the four companies, has only $400 million. So the longer this goes on, the more cash that they have available is going to make me feel more confident about these companies. At this point, all of the casinos in Vegas are shut down and it's indefinitely. We really have no idea how long this is going to go. The companies that I've mentioned in the past for what I think are decent investments, stuff like Microsoft, Coca-Cola, and Nike. Coca-Cola and Nike are consumer staple products, and from what I've seen with the earnings report, the demand for these products has not really gone down as much as you'd expect. And even stuff like Microsoft, that is a massive company, and they have three main fingers of their business. And I've talked in the past about even if stuff like their physical hardware goes down, the other two revenue sources kind of keep them stable. And the fact that these casinos have all of their money kind of invested in these massive casinos, and they're not going to be open anytime soon, is a huge red flag for me. And then their dependence on Macao and these international markets kind of makes me a little wary about taking a position in them. As we've seen just back in 2015 and 2016, these markets were a huge detriment to the company and resulted in massive drops in their share price. And now this kind of exposure to international markets is being praised as a good thing and something that's going to protect them. But just based off of that, I don't feel confident, as we've seen the trend of gaming revenue in these countries have been going down over the past. Also, probably one of the most damning things about these companies is the fact that they are cyclical companies, which means that they follow the overall economic times, which makes a lot of sense. When things are going really well in the economy and people are making a lot of money, it makes them feel a lot more confident to go spend an expensive vacation in Vegas and gamble a lot of money. And so when times are tight and the economy is not doing as well, it makes sense that people aren't flooding to Vegas to spend their hard-earned money. So if you think that we're going to see a recession as a result of the coronavirus and some of the impacts we're seeing from that, this is not a company I would consider taking a position in anytime soon. If you don't own these companies already, I think it's really a beneficial idea to wait as long as possible. Yes, we've seen an incredible discount up to 50% for some of these companies, but at this point we really don't know the extent of the damage and how long this is going to go on for. So if we see a recession following the coronavirus, which is kind of what I'm expecting at this point, it's not going to get better anytime soon. So based off of my kind of review of these four companies, the one that I'm favoring the most is Las Vegas Sands. And there's a few reasons for why I prefer these over the three. While it does have the international exposure that I'm not a huge fan of, the main benefit that I see is that they have the most cash on hand at around $4 billion. So the longer this goes on, I think they'll be able to survive better than the other three. Also, as I've mentioned, a lot of these companies have been aggressively expanding into international markets, and as a result, the long-term debt of these companies are relatively high. And so when I look at something like WYNN, I have not seen a lot of good articles kind of praising the company. Some of the main problems that I see is that their market cap is significantly lower than the overall long-term debt that they have. Currently, their long-term debt is sitting at $10 billion and their market cap is $6, and so that does not give me a lot of confidence in the company. When I look at something like Las Vegas Sands, their market cap is currently $31 billion and their long-term debt is $12. So that ratio is significantly better and makes me feel a lot more confident for picking Las Vegas Sands as my kind of preferred casino stock. So as I mentioned, at this point, if I'm not already a shareholder, I'm going to be staying back for a long time. Obviously, as someone like myself that loves taking positions in these somewhat risky companies that have incredible upside, seeing these incredible discounts on these Las Vegas staples makes me kind of consider taking a position. But doing research from this video and some of the problems associated with them and the fact that they follow the overall economy does not make me feel like this is the right time to take a position. In the future, I will absolutely consider taking a position in these companies, but right now, I think we're at least 1.5 years, 2 years away from that being a great opportunity. If you're someone that already owns one of these companies, I would just kind of hunker down for a while. I think this is going to blow over eventually, but selling your shares at a 50% loss is never really a great idea. This would be a great example of slowly adding to your position to lower your average cost and put you in a better spot. So when the market does recover, you don't have to go up as high to kind of break even. So let me know what you thought about these casino stocks. Which one is your favorite? Do you think that Las Vegas Sands is your favorite, or do you think that I'm kind of missing some major factor that would push you in the direction of a different company? Let me know in the comment section down below. Also, if there's a video or a company you'd like me to go over in a future episode, there's a pinned comment down below, and if you want to add on to that discussion, I'll get to it as soon as I can. Thanks for watching this episode, stay inside, and I'll see you in the next video.